morning. Good morning, and first of all, thanks for the invitation. It's a privilege and honor for me to be here. It is interesting because being here in Dubai, being Italian, first of all, I have to defend myself against a couple of stereotypes, right? I mean, Italians are supposed to be late, but I learned today that we are not the only one, apparently, in the world. Fortunately, I work for a German bank, and I have a global position in Frankfurt, so I'm sure that part of my heritage is gone. And I spent also 10 years in the Anglo-Saxon world, so probably I'm not competing with Gina, apparently, that she has also a very mixed background, but I can say that Gina definitely is probably more flattering than an Italian. So being here, really, I feel at home, and it's a very comfortable feeling so far. It is difficult, I guess, for a bank present something which is not extremely boring, right? Especially in the SME arena like this one. And the first point that I really would like to underline, and thanks also to the organizer, is that this is not an audience only made out of banks, but it is an SME beyond border. It is an event in favor or talking about SMEs. And the fact that there are lots of SMEs over here definitely should help us to go in the right direction. One of the elements that I noticed during the speech of His Excellency, the Secretary General of the Dubai Council, was one important point that I noticed was the fact that if we consider the Middle East, the MENA corridor or the West-East corridor, for sure we are running at different speeds. We are facing a completely different situation in the macroeconomic environment. I guess I represent the Western European world, the so-called developed world, which, as you know, in the last few years certainly did not enjoy a great, exciting time, especially in terms of growth. On the other hand, in the developing world, we are facing a situation where the speed of growth, the GDP is considerably important. The infrastructure, the development of the business is ramping up at a very fast pace. So with these two words, I guess it would be interesting to see. But, and I'm glad that you will host here in Dubai the 2020 Expo. And actually, living in Milan, I invite you also to visit next year, in 2015, the Worldwide Expo in Milan, so at least maybe we can exchange some opinions and the future success of your story. So moving on, I decided to split the presentation in two parts. The first one, I think we as a bank need to provide assistance to the SMEs, not with the traditional product and services that we have. I mean, I could bore you to death if I was talking about internationalization, the letter of credit, all the instruments. You all know, you don't need that. We all have the same, all the banks have the same products. This is not an arena that where we should compete. But I wanted to share with you some of the developments that we have seen in the market, especially in the last few years. So considering the few countries, as you can see in this chart, Germany, Italy, Spain, and Poland. Just to simplify the chart, base 100 we start in 2011, and on the left side of the chart you can see that that shows the trend of the lending from banks to SMEs. And as you can see, with the exception of Germany and Poland, is a downward trend in all the countries. Italy, Spain, and Portugal, they have experienced almost 15 to 20% decrease in lending towards the SMEs. So not a nice story, of course, which means somehow SMEs have suffered particularly in these countries. But on the right side of the chart, you see, despite the fact that the volumes went down, the important and the strong dependency from the long-term loans has been pretty flat. You can see that regardless of the countries, maybe the level is different. There are some countries like, for example, Germany that has a stronger need of and a strong usage of long-term loans, and the other countries are much more dependent on the working capital facilities. But despite the fact the overall lending went down, the long-term has been pretty much flat. We all agree that SMEs are the backbone in the economy, and I learned that this is the same over here. So this chart could be, it is about 4 or 5 European countries, but I'm sure probably it's not different from the same numbers that you see over here. Almost the most important contribution in terms of employment, the highest share of GDP, the highest numbers also of companies in each single country. And as you can see, the contribution to the employment ranges from 50 to 60% in each single country, being Germany, Poland, or Italy, which means that it can be the developing world, it can be the Western world, the Eastern world, but pretty much SMEs, wherever we go, represent the backbone of the economy, and it is our role to try to support them as much as we can. The point is, do we do that, right? If the chart that we have seen before is true, that in this particular environment where the economy is not really supporting the SMEs and the lending is going down, well, I think that we as a bank need to find a solution, a way to support companies to have access to something else, which is the debt capital market, which normally is only open for large corporations, for mid-corporates. But very seldom SMEs do not have access, they do not have the size, they do not even find banks willing to support them, to help them to access investors, being institutional investors, being pension funds, being insurances that are willing to invest into SMEs. But something is changing, right? Especially there are some regulation, and I will show you in a chart, there are some regulations in certain countries that are changing and making this access to the debt capital market much, much easier. It started in 2010 in UK, then in Germany, then in Belgium, in Italy, in Spain. These are markets where the SMEs right now, they can access the debt capital market because from the regulatory point of view, one of the limitations that they had has been eliminated. Which means until a couple of years ago, SMEs could not issue debt which was higher than twice their capital. Which means if you have 1 million capital, you could not issue more than 2 million debt. This limit is no longer the case. So companies and SMEs also, they can issue the debt into the debt capital market using the leverage position that before was only allowed to large corporations. And you understand this opens wide horizons because SMEs that need to grow, need to invest, need to have long-term investment, need to have stability of funding also when the next crisis will hit. And we heard before that you have experienced many, and for sure there will be many more. But the point is we need to have SMEs prepare either to have cash, if you want, or to have a stable structural financing that will support you also during not-so-happy cycles. So if this is happening, let me give you an example of the mini bond market that was somehow launched almost 2 years ago with the changes of regulation. When the announcement was made, the analysis and the statistic were, well, this is a market that theoretically could have between 50 and 100 billion debt capital markets lending allowed to SMEs. And this was a consequence of the fact. Lots of liquidities from insurance, pension funds, investment funds, institutional investors on one hand, and also the fact that banks are shrinking, as I showed you before, the lending towards these companies. If the demand and offer match, then theoretically, they said there is a potential market where SMEs can access mini bonds on one hand, and institutional investors from all over the world, not necessarily from Italy only, can invest into SMEs. The point is we as a bank need to help these companies to present themselves properly. It's different to present yourself to a bank, to your relationship manager that you have known for 10, 5 years, and it's completely different to go into the unknown market, institutional investors, when you need to be transparent, you need to be professionally prepared, you need to have a bank behind your shoulders helping you to have the proper way to present and attract capital. And I believe that we as a bank towards the SMEs, if we want to really bring the SMEs to the next level, we need to have an infrastructure that can help SMEs to go into that direction. So the market was announced and launched almost a year ago. As I said, the potential 50 to 100 billion. Is the reality exactly there? Not really. In the last few months, at least in 2014, as you can see, something is moving. We're still very far away from the potential of the market, but at least $500 million has been issued. So you have seen SMEs that before had no access at all to the debt capital market, at least they've been able in 6 months to issue $500 million. And now, of course, the confidence is running, banks are preparing, funds are helping, infrastructure also helping the thing. Can you do that with your own banks? Probably not. I think I have here several colleagues of several banks, and I'm sure that if we all in our retail or mid-corporate structure ask to our corporate investment banking divisions to support SMEs by creating structure for mini bonds, the answer would be no. You will never find a bank with a corporate investment banking division happy or able to help the retail division or the mid-corporate division to support SMEs. But this is when partnership comes in place. There are plenty of players out there in the market that are supporting private placement, and we as a mid-corporate or SMEs division, partnering together with these private placement companies can help SMEs to match the demand versus the offer. It's a structure, this is a typical structure, I'm not going to bore you, but I mean there are also partnership with European Commission funds and European Commission institution. This is the case of European Investment Fund, which allows banks supporting SMEs to access the debt capital market to guarantee 50% of the exposure. So there is also infrastructure from the government's point of view and a European Commission point of view that will help SMEs to go in that direction. So, but if this is true, so if SMEs have limited access and limited financing alternatives, as we've seen before, we could say that the only solution is just to finance them. But then looking at this chart a while ago, we try to focus on the left side, on the bottom chart. You can see, it probably is hard for the people in the back to see, but we asked the companies, what is your main fear? What is your main need? And as you can see, access to lending is not in the first place. The main concern by company is finding customers. So the main concern is, how do I find my customers? How do I expand my portfolio? How do I expand my markets? So if this is the truth, the point is that, can we help SMEs to find more customers? And can we help SMEs to find the right one? Well, we heard a colleague from Google before, and I don't have the pretentiousness to compete with his speech, but here you can see the development. Right? Development is fast. Technology is changing completely. Now we are in an era where we have smartphones, smart cars, smart everything. Everything is going to be completely different from what we have seen today at a constant speed. So SMEs need to compete in a digital environment, not only global, but digital at the same time. Can we help? This is what the SMEs see. If they want to find software as a solution in the market, this is a portion, just a fraction of what is out there. It's a huge map, it's a huge puzzle. So how can an SME choose the right software as a solution with huge abundance of selection? And how do we transform selection into choice for the SMEs? And when we ask again to companies, say, how do you choose software as services? How do you choose partners can help you to find the right customer, to promote your business appropriately, to find the right supplier, to trust it, and at the same time expand your market in something that you don't know, in Eastern Asia, South Africa, Middle East, and so forth. And when we ask them, the answer is very simple. You can see they go through colleagues, through some sort of consultants, through some other business, through some friends. So definitely, I would say, not a professional structure. But when we ask them, would you consider the bank to help you to find the right software as a solution? As you can see, 56% of them say yes. So somehow they trust banks to be the total reliable partner in order to find solution into the digital world. And so starting from this information, we decide to move on, and they say, okay, we can have, as a bank, two different strategies. We can have what I like to call the Me Too strategy, which means, yes, I have an app, I have the mobile POS, I provide you the online application, but everybody will have it, right? I entered the banking system almost, unfortunately, 24, 25 years ago, and my main job was to convincing customers to move away from the counter to go towards the ATM machine, because that was the invention, right? And we thought that we were the only one having it, and that became the commodity. So all these apps, accessibility, usability, is sooner or later becoming a commodity. We all have it, so it's not a distinctive element for any of us. So if as a bank do we want to have a Me Too strategy, we can go in that direction. If we want to change and shift the paradigm, then we should move between product and services one end with the use of technology. So I can't really say too much because you can imagine we're working on something like this. But imagine a world, a hub, I like to call it, a digital hub, where the banks can help the SME to have the customer experience, realize and achieve the connectivity, and help them to grow in a healthy way. Imagine an aggregator, a hub. Think about Amazon, think about Google, think about any other place you have, where you as an SME, you go and you find all the information you need during your life cycle. Imagine a place where you do not find banking products, but you find solutions for your needs. And your needs are, as an SME, you need to inform and get informed. You need to know where your clients are. You need to know which are the funds that you can find available. You need to be able to connect and find solutions. You need to monitor, because as an SME, your success is depending on the quality of your clients. It is dependent on the quality of your supplier. And if you don't anticipate the failure of one of your clients, you probably will have problems with your bank later on. So imagine a place, an aggregator, where you as an SME, you can find this information, preventing also bad situation. And imagine a place that you can trust, where you can save all your data, a place that you know your data will be safe, being patent, trademarks, documents, balance sheet, solutions. And then imagine a place where you can attract. So imagine a place where your bank can help you to present yourself in a professional way, being a partner for an acquisition, an investor, a shareholder, a bank, a bondholder. So this is the vision that we have. And if we realize this vision, then as a banks, we open a world. Because we don't base our profitability only on the traditional elements of revenue stream coming from the products. What I call the typical products, banking products, being accounts, being transactionality, being lending, being deposits. We all have that, and actually, Google is an example, we as a bank will face new entrants. The world of payment is already mined. Take Apple Pay, but take Alibaba. I mean, the majority of the transactionality and the revenue stream that we have from these activities and these products will be gone pretty soon. So we need to think beyond and say, beside the products, can we also increase retention and increase attraction if we work on services, one hand. But if you're really capable and smart as a bank, and believe me, we have more information than Google put together. Because yes, we have the clients, we have the data, and we have very precious data. Until today, we just didn't know how to use it. But if we're smart enough and we know how to use it, we have a very, very powerful tool. So if we're capable to have an aggregator, a platform, which at one point provides solutions to the SMEs, then we attract partners to be into that aggregator. Because companies that want to sell their products, then they enter into the aggregator provided by the banks. So if this is the vision, and if we're able to develop in a proper way, and as I said, I cannot release the idea fully, but I guess the concept is pretty clear, then I guess we will have achieved all the goals that you see there, because we will create a simple solution for the client, single sign-on, the possibility for the client also to decide how to trade up or trade down the information, certainly excellence in delivery, but the most important thing that is the customer is the one that has the sovereignty of the platform. So if this is the future, I hope, inevitably this cannot be done by banks by itself. I'm a strong believer that if a bank wants to make a difference, they really want to support the SMEs, they need to partner with companies which are in a digital world already up and running. It cannot be done on a standalone, and vice versa. Companies which are on the other side, that we call new entrants, they will have serious issues because they do not know the incredible world of regulation that banks have to live with all the time. But a strong partnership between bank and non-banking institution can really make the difference, and I hope it will help SMEs like yourself to grow. Thank you.
Thank you so much, Roberto. Thank you so much. We've already had 5 messages come through, and can you guess what they're about? They all want to know what are the key steps that an SME needs to take to avail itself of bank funding. Now, I'm just going to preface this by saying that there is a kind of urban myth in this part of the world that in the wonderful world of Western Europe, banks are just falling over themselves to give money to SMEs. Well, I think the statistics show that even in Western Europe, something like only 28% of SMEs actually receive bank finance at all.
Yeah.
From your perspective, what do you perceive to be the key steps that a successful SME needs to follow to avail itself of bank funding?
I'll try to give the diplomatic answer and the non-diplomatic answer, hopefully that is a sort of closed-door meeting, this one. Just a simple statistic. If you think about the SMEs, and allow me to just take Italy as an example, but I can take also Europe in general. In Italy, I have to say, if you think about the statistic, only 37% of SME pay on time, and 67% of the SMEs have losses in their balance sheet, right? So with these two equations, how could you, as a bank, imagine that you're an entrepreneur, lend money to 60%, 67% of the companies that are showing losses? The truth is that we know, unfortunately, that in many cases, the balance sheet is not really reflecting the reality of the strength of the company. Call it for tax reason, call it for accounting issues. So the point is, back to what I said before, you need also to increase the transparency. And the companies need to know that at one point, they need to have a stronger capital structure. They need to look for structures which help them to grow not only through banking support, but also attracting investors. And nowadays there are a huge amount of accelerators, incubators, supporting startups. It's funny because when we talk about SMEs, we always think about a traditional SME that starts, has a cycle, and then in 10 years develop. But today, with the startups, you can have a company which is SME today, is a multi-billion company tomorrow. I was just at a conference a few days ago, and I met the managing director of Uber. You probably heard the famous company. Well, this company started 5 years ago, and it already has 10 billion turnover and a market capitalization of potentially 60. Would you call that a startup and SME in 5 years? So the cycle is changing. And you can be a visionary, or you can be a small one, but banks can help you also to find the right approach.
The point you make about the balance sheet not necessarily reflecting the strength and significance of the business relates to another point that people want to ask you. With the micro bond issuance, do we see a particular market sector providing more bond issuance or take-up than any other SME sector? Is it sector related, or is it generically performance related? What do you think?
Well, and this is what I said, and I skipped the page quickly, but it is our responsibility, like in our case, for example, to develop a fund which will match the interests of the investor, right? So we can have institutional investors from Middle East, Asia, United States that want to invest in a diversified portfolio, which can be geographic. So they want a mix of Germany, Italy, and Spain because they don't want to take a country risk. They want to take a mix of portfolio in different industries because they are counter-cyclical, and so helps also to protect the panel and the cluster of mini bonds, right? And it's, of course, the distributional rating. So if you as a bank put a proper basket, imagine, of issuers of mini bond, which compensates geographical aspect, rating asset, sector aspects, then you find the good match between an aggregate demand of funds from the SMEs, which singly will not be able to achieve it, but as a cluster they will, because on the other hand, you find investors that are willing to take a proper risk return in terms of their investment into that multi-fund.
We're also fascinated by the bank aggregation retail model that you mentioned. For example, we know the potential for that kind of arrangement through the success of bank assurance models, because we know that while the fastest rate of insurance acquisition in the world is through takaful products, the second fastest acquisition model is through retail bank assurance. Mm-hmm. So the bank is a proven route for cross-selling. We know this. With your own bank, what is the model at the moment for product-by-product take-up? And do you see other competitors already coming onto that bandwagon?
I might be naive, but I enjoy always going to these conferences because I feel the pulse of my competitors, and competitors means the other banks, right?
Absolutely.
And when I see that nothing happens, then I'm happy, because it means somehow I'm not losing market shares, right? But so I'm not concerned about the banks, I'm more concerned about the new entrants. Those are the ones that obviously they have nothing to lose. Those are the ones that, of course, are investing in a piece of the value chain of the bank, right? Because if you think about bank, you think about accounts, transactionality, payments, deposit, lending, internationalization, right? But we have a lot of entrants right now, they're attacking payments. And they're seriously attacking payments, which is an important piece of the value chain of the bank. That's why I said, all these companies outside, they're investing billion and billion. They have wonderful amount of researchers spending constantly and investing on how they can improve the customer experience of payments, because obviously this customer experience is not satisfactory in the banking environment, right? So, and this obviously is a scenario that is changing constantly. So back to your question, I mean, how do we envision? If we stick to the traditional products, from my point of view, we all tend to lose. If we enlarge our capability of going beyond and imagine that we can provide, and that's what I say, services, and then services means you don't have to become a client of my bank.
Yeah.
Right? You can continue to have your account, you can continue to have the transactionality with anybody else, bank or non-bank, but you can find with us something that you will not find otherwise. So this is the intent.
Thank you. Roberto, thank you for a really wonderful session. Ladies and gentlemen, please.
Thank you.
Thank you so much.